There's been lots of factors at play in the gold market in the last few years. I think the buying initially kicked off during COVID, when in 2020 we saw obviously lots of concern about what COVID would mean for the global economy, lots of reactions from central banks printing money, governments spending money to fight COVID, and this saw other asset markets decline, like equities, bonds, and gold performed very well. We corrected a little bit in 2021, and 2022 was a flat year, really, for gold. Ended up more or less where it started. But the Russian invasion of Ukraine, of course, added to geopolitical risk just over a year ago now. And now we've seen, after the Federal Reserve in the United States and other central banks around the world has hiked interest rates at a very rapid pace, that's causing stress in the financial system. So we've seen some major bank failures around the world. That's made investors cautious and worried. So there's been lots of reasons why investors have wanted to own gold because of its properties as a safe haven asset and something that helps protect your portfolio. At the same time, because economies have been locked down on and off for much of the last 2 to 3 years, now that we've learned to live with the COVID virus and pretty much all the restrictions around the world have gone away, there's been pent-up demand for weddings, pent-up demand for spending, for luxury. So as we've seen each market open up, take, for example, China this year. They were locked down particularly hard in 2022 and relaxed their COVID restrictions really around the end of last year. We've seen a big boost in jewelry buying and a big boost in investment buying as well. So I think that explains a lot of the retail institutional investment, a lot of the jewelry buying. The central bank story is slightly different, I think. And the central bank story is being driven by a number of factors. I mean, we've seen central banks buy gold every year since the global financial crisis, but they've really accelerated the amount of purchases that they've made since the middle of 2022. And I think what's happening there is some of these de-dollarization stories, which have been circulating in the press and in social media, are being reflected in the purchases that are being made by predominantly emerging market central banks. So it's a confluence of factors that has seen most aspects of the gold market firing at the same time, and that's contributed to the strong performance in gold over the last 3 years.